Hello, this is Joe Pryor, the virtual real estate team in Oklahoma City, and kind of did a general introduction about becoming a serial investor or whatever you want to call it, a home or multiple property investor. But let's get into probably the most important aspect of this, which is financing. Now, typically what you're going to need to do is do what's called a Fannie Mae conforming loan, which is typically going to be 20% down. Now there is a 15% down that you can do, and we'll get into that in just a little bit. But here's the thing, if you are an individual with a good income, you can have up to 10 mortgages with Fannie Mae. Now that's any kind of mortgage, first home, a second home, an investment home, a total of mortgages. If you own it free and clear, it doesn't count. And that also means that it's not just a single family, you can go up to 4 units together, and that is considered one mortgage to Fannie Mae. So 10 mortgages total. Now the first 4 are going to be at 20% down. And then purchase 5 through 10 is going to be at 25% down with a few more reserve requirements. Now, the good news as you get to these 4 at 20% down is that you have income coming in that counts. In other words, it's going to offset your debt on the previous homes. And so that is going to help you as you keep qualifying. Now, the exception to the rule is that multifamily, small multifamily, which is duplex to quadruplex. That's 25% down regardless. And then there is a 15% down loan. Not every lender has this, but it includes mortgage insurance, which is going to be, let's say, plus or minus about $65 a month added on for 5 years at a higher interest rate than you're going to get with 20 to 25. My recommendation is to go with the 20% down, not do the mortgage insurance, because 5, 10, 20 years down the road, you're going to be better off. And so those are the basic parameters. Now, there is some little extras that can go on here. Let's say that, and I deal with this quite a bit, where a married couple, both have significant incomes. And even though you're taking title together, that now means that you can go to 20 Fannie Mae mortgages. In other words, 10 for one person, 10 for the other. That extends. So that's, again, that second person, your husband or wife, those first 4 are going to be 20%. Now, we also talked a little bit in the first video about diversifying the kind of properties that you have. Now, I'm a very great believer in leverage. The interest rates now are crazy, even at 20% down. And so getting those first 4 mortgages will get you to that income producing area, that protection against vacancy area much quicker. And so what I normally recommend is let's go with the single family homes at the 20% down. Now, I have people that buy only multifamily, and that's okay. We're going to set up the parameters and what really you want in terms of how we create a plan to go forward. But remember that 5 through 10 is 25%. So many of my investors are going to buy duplexes, for instance, in 5 through 10. Maybe they're going to do 3 out of those 5, which now means instead of 10 doors of rental, I have 13 doors of rental. Now, you can also go beyond 10 in 2 different ways. You can go to private mortgage companies that are what we call non-conforming conventional mortgages. Very often hard to get 30 years, but it's going to be at higher interest rates. That's also possible. We also have commercial policies where we can take 5 or 6 homes, package them together in one mortgage, and then what you can do is those 6 homes now become one mortgage. Doesn't matter how many you have in there. But primarily what we're talking about is that first-time investor who has 1 home, going with a Fannie Mae, going with a 20% down, going to 10 homes or possibly 20 homes. We have lenders that can really help you out on this. We'll discuss exactly how you go forward when we have our first Zoom meeting. So that's this video. Stay tuned for more. We want to educate you so that you know where you're going.